Welcome back to The Explainer. Today we're diving into a really wild day on the Indian market, February 23, 2026. This is a story where something that happened all the way over in Washington, D.C. sent Dalal Street on a complete roller coaster, basically erasing over half of the gains the market made right at the start of the day. It's a fascinating one.
So the day starts with this huge surge, right? Everyone's thinking, wow, this is fantastic news. But then, poof, all that optimism just evaporated. And that leaves us with the big question we're going to tackle today. What on earth happened between the opening bell and the closing bell?
And you can see the story right here. I mean, look at this. The Sensex shoots up almost 600 points as soon as the market opens. You can almost hear the collective sigh of relief from investors. But then, fast forward to the end of the day, and that incredible gain? Yeah, it got slashed by more than half. That's a serious U-turn.
So if you want to understand what caused this whiplash effect, we've got to look thousands of miles away. Believe it or not, the key to this whole story wasn't written in Mumbai. It wasn't about a new domestic policy or some big earnings report. Nope, it was all about a political and legal showdown happening in the U.S.
All right, let's get into the main event, this tariff tug-of-war. And I want to be clear, this was not some slow, boring policy discussion. This was a fast and furious battle between the U.S. Supreme Court and the White House, and it sent absolute shockwaves across the entire globe.
And the crazy part is, this all happened in the span of a single weekend. So picture this. Friday night, the news drops. The U.S. Supreme Court says President Trump's reciprocal tariffs are illegal. That's fantastic news, right? The market thinks so too. So Monday morning, we see this huge relief rally in India. But here's the twist. Over that same weekend, the White House already had a plan B. They just sidestepped the court's ruling and slapped on a brand new 15% flat tariff on basically everything.
And this really gets to the heart of the matter. You had the old policy, these reciprocal tariffs, which were just pure chaos. Nobody knew what to expect from one day to the next. So yeah, the market was overjoyed to see them gone. But the new policy? It was like trading a wild, unpredictable storm for a guaranteed heavy rain. It was predictable, sure, but it came with a very clear, very expensive price tag, 15% on everything. The chaos was out, but a big bill was in.
And you know, this brings up such a critical point. If you're a business, you're trying to plan things out, right? Your supply chain, your prices, and for you, certainty is everything. Even if it's expensive certainty, it's almost always better than total chaos. The market basically decided it would rather deal with an enemy it knows than one it can't predict.
Okay, so that's the big picture. But how did all this news actually translate to the market itself? Well, it created a really clear divide, a story of winners and losers. Not every stock reacted the same way, and the market didn't waste any time sorting them out.
Let's start with the winners. You've got names like Adani Ports, Kotak Bank, HDFC Life. They were all at the top of the leaderboard. And what do they have in common? They're mostly focused on the domestic Indian economy. Think banking, insurance, logistics. They're kind of insulated.
But on the flip side, it was a really tough day for companies like the metals giant Hindalco and the big IT players Infosys and Wipro. And for them, the story is the exact opposite. Their businesses are deeply connected to global trade and especially the U.S. market.
And the why behind this split is pretty straightforward, right? The winners were basically shielded from the tariff drama. Banks were doing just fine with plenty of domestic liquidity, and Adani Ports had its own positive news, happening with a new deal. But the losers, man, they were right in the firing line. The IT companies were worried that this 15% tariff would eat into their profits from U.S. clients, and the metals sector just got hammered by all the uncertainty in global trade.
Okay, but the tariff saga wasn't the only story of the day, not by a long shot. Away from all the headlines, a few individual companies were having some seriously dramatic days of their own for completely different reasons.
First, let's talk about IDFC First Bank. Wow, the stock just took an absolute nosedive during the day. We're talking a 16% drop intraday. For a bank, that is a huge, huge move.
So what happened? Turns out the bank had to come out and report a massive fraudulent transaction, 590 crore rupees at one of its branches. Yep, that'll send investors running for the exits every single time.
But then you have the complete opposite story with Morpin Laboratories. Their stock was on an absolute rocket ship. Just massive buying interest, pushing it up an incredible 17%.
And the fuel for that rocket? Some fantastic news of their own. The company announced they just landed a huge new contract worth 825 crore rupees. No surprise the stock just took off. You know, with all this chaos and volatility going on, something else pretty interesting was happening under the radar: insider buying.
Now, this is when the execs at a company, the people who know it inside and out, go out and buy their own company stock with their own money.
And we saw it happening at a few smaller companies, Suggs Lloyd, GoCool Reef Oils, Laxmi Dental. It's always a really strong signal, right? It's the insiders basically saying, hey, we think our stock is a bargain right now, no matter what kind of crazy stuff is happening in the wider market.
Okay, so let's zoom out again. Let's put this whole crazy day into the bigger global picture, because that's where we find the real key takeaway.
What's really fascinating is that while the Indian market was having this big U-turn, over in Hong Kong, the Hang Seng Index shot up more than 2.5%. So why the difference? Well, it seems traders there saw that new 15% tariff as the lesser of two evils. For them, getting rid of the chaos was more than enough reason to rally.
And the currency markets followed suit, pretty logically. The Indian rupee actually got a bit stronger against the US dollar. That's because the dollar itself weakened a bit right after the Supreme Court's initial ruling against the old tariffs.
So when you piece it all together, you've got the U-turn in India, the big rally in Hong Kong, the clear split between winners and losers. It all points to one big theme for the day. Markets know how to handle a known cost. They can price it in. What they absolutely hate is chaos. They would rather take predictable bad news over unpredictable uncertainty. And that leaves us with one final big question to chew on. Is predictable bad news really better than unpredictable good news? Well, if today's market action is anything to go by, the answer is a resounding yes. It seems that in the complicated game of global economics, a predictable, even costly path is worth way more than the slim hope of good news hiding in a fog of uncertainty. Today, the market told us exactly